2013 is well underway, but it doesn't mean that it's too late to tap into some potential profit opportunities. We have more in this week's Marketwatch.
Marketwatch.
And here in the studio to give us some insight of where the profit opportunities are in the spring and summer months is Jim Robb, Director of the Livestock Marketing Information Center. Jim, thanks for coming to the show.
Thanks for the invite.
Well, I'd like to begin by getting some of your perspective of the overall economic environment facing the cattle industry.
Well, overall, the economy is still growing rather slow in the U.S., but consumers are starting to finally feel better, so that's a little bit of a positive. Our foreign market's still a little bit weak, but on the supply side, we have still tightening cattle supplies. Through the first quarter of this year, our herd is still shrinking on the beef cow side. So with a little help maybe from Mother Nature this year, and in terms of corn costs coming down, etc., we could have the second half of 2013 better than the second half of 2012. So there's a little bit of optimism, again, a bit dependent on Mother Nature.
Well, that is good news. You talk about Mother Nature. You know, 2012 was a tough year from a profit perspective, especially for folks suffering in the drought areas. Give us your perspective of how 2013 is shaping up.
Well, 2013 seems to be shaping up better than 2012 came in. We were pretty optimistic early in 2012, but then the drought hit, really cut quite a bit of profitability from our cow-calf sector. Our preliminary estimates for 2013 is that returns over cash costs plus pasture rent for the typical cow-calf producer in the U.S. this year will be $160 to $165 per cow. That's pretty good. That doesn't cover all your costs, but that's a good rate of return. In fact, the best probably since 2004. So again, a little cooperation from Mother Nature, lower corn costs, a little bit of strength from the consumer side, we can look at some better returns in the cow-calf sector in 2013.
You know, we were talking before the show about some ideas you had relative to how cow-calf producers can find other profit opportunities. You mind sharing some of those?
I think particularly in this economic environment, one area we often overlook are the cull cows. Those prices are record high, probably will continue to get stronger. Strong demand for hamburger, and we can look at some of our production practices and our marketing of those cull cows and gain some profitability. I think also in this economic environment of high land rental rates and costs, high feedstuff costs, some of these pasture and range improvements now show economic returns that we didn't show a few years ago. Cross fencing, improving pasture conditions, taking out the invasive species, all those things really pencil quite a bit differently in this economic environment than they did a few years ago. I think another aspect to look at is really adding value to the calves. Some of these programs where we precondition, etc., pay off quite a bit better than a few years ago. And lastly, especially we look over the next few quarters, the cattle feeding sector has had a really hard time in the U.S. with these record high feedstuff costs. They're getting a little bit better. They'll still be very cautious buyers, though, for calves and yearlings. So in some cases, retained ownership could start to pencil again, where it really hasn't penciled very well from a cow-calf perspective, especially on those better quality calves that most producers have. Maybe an opportunity to put a sharp pencil to that again here 2013.
Those are some great recommendations. Thanks so much for coming to the show and sharing those.
Thank you.
For more information on potential profit opportunities or a wide variety of other market projections, just log on to our website at cattlemantocattleman.org.